Morning, guys. We're bringing on air this morning what everyone's talking about, the first interest rate meeting of 2026. We've got a broker on to give you the predictions. Stay tuned. We're going to tell you what is about to drop. Zach, good morning.
G'day, mate.
Thanks for coming on air. It's been a while, actually, since we've had a guest appearance from you.
Thanks for having me.
Representative of Shore Financial, brilliant mortgage brokerage. What are you seeing? How was your Chrissy New Year? The things coming back quick?
Yeah, it was good. I think the suit pants are a little bit tighter fitting after the Christmas and New Year's break, but yeah, hopefully they come back into fit. From business perspective, I think it's pretty busy out there. There's quite a lot of heat in the market. People seem to be moving pretty quickly. I know my pre-approvals aren't hanging around longer than a month, so yeah, people are moving once they've got that ticket to go shopping and putting their hand up. I mean, you're at the coalface, so
yeah, we're seeing that. That's consistent with days on market, and particularly under the $1.5 million price point, where people are, buying something potentially as a first home or as an upsize into a larger apartment. They're doing really well, and the temperature of the market came back quite quickly this year. Normally, it would take a few weeks out of January to get going, but the momentum from the back of last year certainly carried through. And from mid-Jan onwards, it's actually been quite busy. Now all the disruptions out of the way, it's really like, let's just see where the market goes. But, this is obviously a conversation, interest rates and the RBA meeting that everyone's talking about. It feels early for the new year, but this is it.
And January's over. We're into
Feb,
the shortest month of the year, and I think there's been a bit of a shift in what the expectation is for tomorrow's RBA meeting.
Yeah.
The recent inflation data, it's trim means back outside the target range, up near 3.5%.
Yep. So that's inflation you're talking about?
Inflation crept up another 0.9% over the December quarter. So, in that run up to the end of the year, it was pumping again. I think there were a lot more jobs created and a lot more people employed, whereas the RBA has been following the unemployment. And if that was going up, more people becoming unemployed, people cutting jobs and businesses saying that, we can cut the fat and be a bit more efficient, then they might, that might be supporting a rate cut, but it's gone the other way.
Yeah.
As a fuller workforce, more employment, more money in the economy, hence more inflation. So, yeah, there's a shift to a rate rise happening tomorrow, which might just be the band-aid that needs to be ripped off for the RBA to continue, rounding out its quelling of inflation and cooling the economy.
Yep. And I guess it's never good news, but what does that mean for people with a mortgage or taking a mortgage? I like how you simply put it, for about every $1 million of debt. Yeah,
there's general rule of thumb for every $1 million, 0.25% movement can be around $170 a month increase.
For your repayments.
Yeah, and if it's $100,000, then about $15 to $17 per month as a difference to what you have been repaying. Now, a lot of lenders have passed on a slight change in their interest rates in the last little period. They've reduced their discount margins, which has seen some variable rates and even some of the fixed rates move 10 to 15 basis points. So if there is a 25 basis point movement tomorrow, then maybe only some of the lenders pass on the full 25% movement, 0.25% movement, rather than the ones that have already passed on a partial increase. So
right,
we'll see what happens.
And are you still finding people taking new mortgages with variable rates, or are they going fixed term? Case-by-case scenario?
There has been a few questions about fixed rates. The difference between the best variable rate and the best fixed rate for, say, 2 years is 15 basis points. So
Okay.
people are still taking the view that we're almost at the point where the inflation has been tamed, despite what may potentially happen tomorrow.
Yep.
And therefore, they're not going to lock in for 2 years, and they're going to have that flexibility if things, track downwards and then become more efficient in that period.
Yep.
There's only a couple of lenders that offer fully offset accounts with fixed rates as well. So there's a lot of people still taking the punt on having that offset if they've got that cash balance and utilizing that. If they're not paying it straight into that mortgage and reducing the limit and reducing the repayment.
Sure. Okay. The money markets, what are they saying odds-wise for tomorrow? Do we know?
There's about 65% in favour of a rise. That has chopped and changed over the last month, and there'll be another reading out this morning. So, but I think it's I think it's fairly likely. There seems to be a lot of support for it, just because it's in line with what the RBA's goal has been.
I was trying to be optimistic and say could be Christmas spending, it could be seasonal. Let's just get through, what tends to be in the year, the part of the year where people are spending the most amount of money. But it doesn't look like it's going away.
When the weather gets warmer around September and the lead up to that last quarter, everyone seems to go a bit giddy and has a better time and gets out there and puts some more money into the economy. But I mean, if there are concerned mortgage holders about the increase, if you do have cash and offset, the one way to shore up a reduction in your repayment is to take that out of the offset, pay it into the loan, and then speak to your bank or broker about reducing the repayment so that it's recalibrated on what your reduced loan limit is. Obviously, you then lose the flexibility of having that cash if needed it for a rainy day, or you didn't have another account and that was your only reserve.
Yep.
But if you're conscious about cash flow, then you can certainly help yourself there.
And another nice thing to maybe just bring on air, what will this do for serviceability? I guess that's what people are trying to protect at the moment. The best way, obviously, is just increase your income, reduce your liabilities and debts. But what will this do for people's borrowing capacity?
Yeah, so another back of the envelope calculation that anyone can apply is about a 1.5 to 2% change in your borrowing capacity is associated with 0.25% rate movement. So if it goes up, then your serviceability comes down.
Yep.
But yeah, as I said, there are most of the lenders that have passed on a partial increase already, so it shouldn't impact too much. I suppose one thing to touch on is that when rates are on hold, there seems to be a slightly less activity. I think like movement stimulates people actually making decisions and actually completing on what they've set out to do, or maybe pulling back.
Well, look, what I have seen from particularly Northern Beaches, where we're listing, selling, assisting with people buying as well, it seems to be a micro market that is operating in its own world, separate to the news reported in the broader market. So I think if you're operating in a space where you're trying to buy or sell in a particular market, it's good to just speak with the agents or the professionals that are on the ground. And they will actually report to you what the open home numbers are, what the days on market are, what the stock levels are sitting at, because those are the three metrics that we look at more consistently to gauge where things are sitting, more so than what the rates are going to do tomorrow.
What are they sitting at the moment?
It's actually quite low for the overall Northern Beaches, about 780, 800 properties on the market across all price points. But that was half at Christmas. So what did double? It got back to sort of pre-Christmas stock levels. As I said, the apartments are having very quick days on market. Mid sort of entry level houses doing exceptionally well, and then some properties that are sort of appearing overpriced, voted by the market, they're sitting. But your A grade and B grade properties, there's a sort of real flux of buyers going out for that, and there is competition there. And your C and D grade properties, if they're not priced accordingly, in line with where the market sees value, they're just sitting that little bit longer. So I think there's a bit of strategy involved there.
and still a lot of first home buyers in the market, as well as first time investors, is what I'm seeing. And what are you seeing around our area here?
Yeah, it's a mix, and it's nice to see some investors back into the market. There was probably a 12-month period where you just didn't hear the investor word being thrown around. But I'm seeing the real concentrate of investors going towards newer buildings, and that may just be coincidental that we've got a couple of new buildings in DY settling at the moment, but the investors are at those front doors because they know they're getting premiums on their rents. We're renting 1 bedrooms for $850 a week and 2 bedrooms for $1250 a week. That, sounds crazy and it almost sounds unachievable to those investors that had been out of the market for a little while. But now we're getting those rents. They've got their new building depreciation. They're getting their pre-approvals arranged. They're buying.
Yeah, definitely. I think also, like, from the first home buyer side of things, there's a lot of people that have come out of rentals that are very, very close to what they would be paying on a mortgage if they were to buy themselves.
Yep.
If they're not coming straight out of home with mum and dad, they're making the leap of faith and backing themselves and speaking to someone like me for their borrowing capacity and figuring out how far they can get if they wanted to buy, and how much more they need to figure out for on top of their rent. So,
what are the turnaround times at the moment for pre-approval?
It always varies lender to lender. We've got banks that do it the same day, and then there's, for other sort of complex scenarios, it might take a few business days up to a week. For the first home guarantee scheme or the low deposit scheme borrowers, first time buyers, it does have to go to, well, when you're approved, when you find a property, it does take a bit of time because it goes to the government entity to get the approval, because they're guaranteeing the LMI. So that can take some of the time out of your process. So maybe adding another few business days to a week there. Just when it gets assessed by the bank, they then go, yep, we're happy with it. It goes to the government scheme, and then they make sure it stacks up.
But for the grand scheme of things, if you're wanting to buy a property, the month of February could be your month, and from start to finish, it could be, pretty much wrapped up if you're making plans.
Yeah, I've got a couple of clients that have just come to me and they weren't approved and they've bought and they're settling in less than 2 weeks, and that's not a problem. So it's
super exciting.
Yeah, well, it's a bit different than someone getting pre-approved and then looking around for 3 months, maybe extending for another 3. That's fairly common because it takes time to find the right property, especially with some of the first home buyers at the moment. They might be getting a little bit disheartened at the auctions, but I think you don't want to be putting your hand up for the first bid at an auction. Sort of test the waters, see what happens with the rest of the crowd, and then jump in.
It can be nervous for sure, but I have to say a lot of the analysis this year is saying that January, February, March is going to be a good, strong first quarter for buying and selling, and then obviously April's got a month of disruptions with Easter, so a great time to be out in the market. And if you need help with buying and selling, reach out to the team, finance this guy, and it's just nice to see that the turnaround times are pretty snappy. If you want to make a decision, it's all there on the table.
Yeah, exactly right.
Thank you.
Ready to go.
Have a good day, guys. Hope that helped. Any questions, drop them in. We'll answer them after for you. Otherwise, have a really good day, and stay tuned on the meeting tomorrow at 2 o'clock. Do we find out?
3.
3 o'clock. There you go.